Let's get some reaction to the latest developments. Let's bring in former Deputy Director of the National Economic Council, Clete Williams. Clete, great to have you with us.
Thanks for having me.
Given what has transpired this afternoon, can you sort of give us a grade on how the U.S.-China relationship is compared to, say, 6 months ago?
Well, the U.S.-China relationship has really been on a downward spiral for quite some time. And I think if you look back 6 months ago, we were in a position where we were signing the Phase 1 deal. But even as that was happening, there were a lot of different things going on behind the scenes that were already starting a technology decoupling, and we're already in some respects starting a financial decoupling. So I don't think things are dramatically different, but I do think that they have accelerated in a very negative direction here, and that's more of what you're seeing today.
There have been a number of potential measures taken that could impact publicly traded companies. For instance, the Trump administration indicating that it would scrap a 2013 agreement in which Chinese and U.S. accounting officials would basically swap papers so that each can audit companies listed in those countries. And I'm wondering, from a financial markets perspective, Clete, what is the most troubling in your view in terms of the developments that have been happening in the deterioration of this relationship?
Well, if you look at the financial markets, I think that 2013 MOU honestly isn't all that significant because China hasn't been following it anyway. They haven't been letting our regulators audit the financial records of their companies. And so just scrapping that, I don't think is going to make a big difference. And I do think that the administration is right to go after this issue of access to audits. But what is troubling to me is the next part of that issue, and that there are folks in Congress, there are folks in the White House who are basically saying any investment flows into China are problematic because they contribute to China's military-civilian complex, and therefore any money going to a Chinese company ultimately builds up the Chinese military. And if that is your view, then no financial flows between our countries are really acceptable. And so that, to me, is much more troubling. I'm not as worried about the audit stuff because I think it's appropriate, and it's really about providing greater disclosure to our investors. But when you start saying any financial flows between us are a problem, I think that's a totally different ballgame.
Clete, thanks for your input. We appreciate it. Clete Williams joining us on the phone. Guy Adami, it sounds like a wall is being built between China and the U.S. in terms of those financial flows.
Yeah, without question. This is something we've said on the show for quite some time, that the rhetoric between the United States and the Chinese is only going to get worse. The mistake that I've made is I thought it would be extraordinarily negative for the market. The market, for whatever reason, doesn't seem to care. I think the market should take notice because this is going to get ramped up. And I'm hard-pressed to believe you're not going to see some statement out of the Chinese within the next 6 to 8 hours, quite frankly, because there will be some sort of, I would imagine, rhetoric retaliation. And it's just going to continue. Again, President Trump is probably 100% correct to go after the Chinese and to draw a line in the sand. With that said, it has severe ramifications for the market. I think he looks at our stock market and says, and he mentioned it earlier, with a whisper of an all-time high, I think in his mind, he has some chips he can play with in terms of the rhetoric. And I think that is why the VIX is probably going to stay around the 30 level.
I mean, what Clete said was really interesting. 6 months, in the past 6 months, the relationship has been on a downward spiral. But in the past 6 months, the markets have recovered big time from the March 23rd lows, Carter. And so, it almost is like the market is completely inured to every one of these developments at this point. It doesn't matter what Beijing says because they say it all. They say butt out of our business, and yet the markets continue to go higher.
Right. I mean, I think because it's all about the Fed, right? You throw this kind of money. Everyone knows what the M1 index is doing. It's almost a record spike at any short time frame, and there's an expression: the fix is in. I mean, if you just helicopter money, literally, that creates the kind of moves we've seen in some of these stocks, both beaten down names bouncing as well as steep, uncorrected names surging. But nothing, no tricks last forever.